Hey everyone, Scott Smith from the Smith team at Kevin Williams. Happy Friday, Friday, March 19th. Wow, can't believe we're already on the home stretch into spring. Tomorrow, I think, is the first official day of spring, and it looks like we're going to have some decent weather. Hopefully, those snowstorms hold off for us. But when it comes to real estate, what is the weather forecast for what we are seeing? And how do you get your offers accepted? So that's a big question that we've got right now because, quite honestly, the real estate market for buyers, it is a bloodbath. It is so competitive. 26 years of real estate, I've never seen anything like it. And we've got to come up with some creative ways for our clients to get their offer to stick. And from that, we're actually, because we do so many transactions, we have a unique perspective for our clients on how to structure offers in different creative ways that also protects them. So aside from price, which is always competitive, we are seeing offers that are 10, 15, 20, 30,000, $40,000 over list price that aren't sticking. So how can you be competitive aside from price? And when we're evaluating offers on behalf of our sellers, we look at price, obviously, terms, timing, and then any contingencies. So inspection contingencies, home sale contingency, financing contingency, all those kind of things. So the first one I want to talk about is terms. So when it comes to writing an offer on property, obviously if buyers are getting financing, how can we make sure that the terms of their offer stand out? And one thing that we're doing is making sure that we've got strong earnest money. So typically we'll advise doubling what a standard earnest money. So on a $400,000 house, we're saying, instead of doing the traditional $4,000, we'll up that to maybe $8,000 or $10,000 just to make sure it stands out. Back in the days of bank-owned properties with the foreclosures, the banks would actually require non-refundable earnest money, and we're starting to see that more and more. Once the home inspection contingency is removed, where that earnest money becomes non-refundable. It's pretty aggressive, but it's certainly a strategy. The terms, depending on the buyer's down payment availability, we're working with our lenders to make sure that they're able to cover the closing costs in some strategic ways, whether they're getting some secondary financing or a gift from parents, or even some down payment assistance resources. The next thing that we're looking at is timing, and timing is probably the biggest wild card right now. That buyers that are flexible, that they've got that ability to be flexible with timing. So if we can get a quick closing, and then offer the seller a potential money or a free rent back from the closing time frame until they find a home, or if our sellers are actually willing to move into a short-term rental until they find something. We've got a couple clients that are in that boat right now, just waiting to find the right home so they can jump on it. And having that flexibility is huge, because there's kind of that domino effect where you've got someone that's selling a home to a first-time buyer, then they've got to find the next home, and then we're moving to the next one and the next one. So there's that chain of properties, and if one of those buyers has flexibility, it is absolutely huge. The next thing that we're seeing more and more is the contingencies. So we obviously have financing contingency, making sure that we've got a strong pre-approval letter for our buyers. We work with some great lenders, and so anytime we work with a buyer, we want to make sure that we've got a strong pre-approval letter from one of those lenders. The next contingency that we might see is an inspection contingency. And there's been a lot of buzz around the real estate industry about buyers that are waiving home inspections and different ways to get around that. So since I've been in real estate, we've always made it a point to attend our buyers' home inspections. So we're not home inspectors, but we certainly have a great perspective on what potential issues would be. And for us, it's important to understand what you're getting into when you're buying a home. Obviously, it's a significant investment, several $100,000, and if you're paying well above asking price. The biggest question for those buyers that we want to ask is, if we found anything in the inspection that would be worthy of walking away from, or that you wouldn't be able to financially be able to address. And that's the big question. If they're looking at walking away from a transaction because of that home inspection, those are the big questions that they have to ask themselves. We cannot advise them one way or another. We can just say, hey, here's your options. When buying a townhome, that presents a whole different, angle with it, because townhomes, you've got an association that's going to cover the exterior. So roof, siding, driveway, those kind of things are covered by the association. So in that case, we might even take a closer look at doing a home warranty. We'll cover the mechanicals and the appliances in the home. So a number of different strategies, certainly creative ways that we can be competitive in today's market, because it's we're expecting this. We're going to see this for the next probably year, or if not more, with the low inventory and affordable interest rates and affordability. So we've got to free up some of the logjam in the marketplace, so we can get some of these buyers into homes. So if you know of anyone that's looking to buy or sell, certainly reach out to us, and we'd be happy to help them out with some of those strategies. Take care. Have a great weekend. See ya.